Well, welcome to this Park Launch webinar. My name is Farid Khwaja. I'm the chairman of KASB Securities. It's a stock brokerage in Pakistan, and our app K-Trade is one of the most popular fintech products in Pakistan. I live in the UK, but right now I'm in London. I'm in Karachi. So if my internet gets patchy, please do excuse me. And the topic of today's talk is the bullish case for Pakistan. And I think the mere existence of the fact that we are talking and the existence of Park Launch for me is a bullish case that Park Launch has connected so many overseas Pakistanis living at all different parts of the world who are very successful in their careers to connect together with like-minded people to find ways of contributing back to Pakistan. So for me, that is one of a very strong indicator for the bullish case for Pakistan. But to talk more about it, I'm delighted to host Faisal Aftab, who's the executive director and the co-founder of Lakson Venture Capital. Faisal has a very interesting background. Like many of us on this call, he has spent a lot of time in the US. He lived in New York. And I'm reading his bio, which is very interesting. He has an MBA from Oxford, joined Bachelor's and Master's from Michigan State University, and more than 2 decades of experience as an investor, entrepreneur, and executive in diversified industries. So before setting up Lakson, he was one of the co-founders of Indus TV, and he also co-founded MTV Pakistan, which I was a big fan of. He has worked in financial services. He has been a management consultant in Deloitte, and he's also an early investor in Bitcoin and Ethereum. He has also invested in hedge funds, venture capital funds, and is an active angel investor. He's a limited partner of 500 Startups, which is a Silicon Valley-based venture capital fund. He's a board member of BookMe, Knowledge Platform, Monday Express, Bar Gallery, and Rumi.pk, which I suppose are portfolio investments of Lakson. So with that, Faisal, I just read your profile, but I'll just add that I think that you are one of the most credible and mature venture capitalists which I find in Pakistan. I think the companies you have run and set up in the past are of course big brand names. So it's that too, and then the fact that people like you return to Pakistan and are doing venture cap and investing in good quality companies, for me is also a bullish indicator for the bull case for Pakistan. So would love to hear from you. What do you find interesting in the story for the bull case for Pakistan? So over to you, Faisal. The format of this webinar would be that Faisal will speak now for the next 15 to 20 minutes, and then we will be open for Q&A. And for questions, please write your questions on chat, and I'll then read it for Faisal. So with that, Faisal, the floor is yours.
Thank you, Ali. Thank you so much for your kind words. You're always very kind towards me. I guess to describe the bullish case for Pakistan, the most natural way to do it is to do it in a human way, as to why I actually took the plunge and moved back from the US in 2017 after spending almost, I lost count, I think it was more than 20 years in the US. I moved there in 1995 and came back in 2017. So I'll let everyone else do the math. So why did I make this move? Right, life was pretty good over there, living in New York. Kids, family, and most of my friends were kind of confused why I'm gradually trying to make a move back to a country that was called one of the most dangerous places on earth. I saw something. I think that it was a pattern that I read 2008 onwards. I went through the 2008 financial crisis. Was working at a company called National Financial Partners at the time. Who was founded by Jessica Biblowick. Her father was Sandy Wiles, the guy who created Citigroup. And incidentally, she was at Salomon Smith Barney. So National Financial Partners, again, in their financial sector, I was in the mergers and acquisitions team focused on restructuring of a lot of companies we'd acquire. What ended up happening was most of my bonuses were in stock options with National Financial Partners. And I saw collectively in front of my eyes the stock value go from $62 down to 50 cents, which I didn't think was fathomable. And Citigroup, which was, again, I wouldn't say an affiliate company, but obviously always put in line with National Financial Partners, given that Sandy Wiles had created it, that also dropped to, I think, roughly $1. So you can imagine what was going through everyone's mind. What happened for me at that point was, I think that was an epiphany and an awakening. where I started looking for, I couldn't imagine that something that we consider so strong, especially the US economy or the global monetary system, could actually contract to such a level. So I decided to dig down and look at individuals that potentially saw this coming. And so there were some individuals that popped up like Kyle Bass and then Passport Capital as well, that had essentially called out the subprime market and the crisis in 2008. And then of course, Ray Dalio is one of those individuals as well. And so as I started studying and diving deep, and incidentally, by the way, that was the same time when I went to do my MBA in 2009 at Oxford. So it gave me some free time to actually think outside the box, the proverbial thinking outside the box, you can say. So in essence, what I did was I decided to understand finance from scratch. And when you do that, you actually start to learn what the monetary system is, how it's based on debt, and how different countries get impacted based on monetary cycles. So starting, if I start with a pattern, the pattern that I noticed was that every time the monetary system contracts, there's basically, it's essentially credit is running out. And so the second you see 0% financing on furniture, you should probably be worried about the next contraction in the system. So let's trace it back to 1998, where we had the last major contraction, which was basically long-term capital management. The Asian tigers, Russia and everything blowing up throughout the world. And then one hedge fund in Wall Street, long-term capital management, essentially contracted, created a mess, and all of Wall Street had to bail out that fund. Incidentally, right after that, you saw new economies come online, which were essentially countries that are now known as the pigs, but they were Portugal, Italy, Ireland, Greece, and Spain. And effectively, France and Germany's balance sheet were used to make them creditworthy by bringing them into the Eurozone. And then you saw essentially massive expansion of debt throughout that period, not just in the Eurozone, obviously throughout the parts of the world, but the Eurozone led growth in that period. Then obviously 2008 came about, where I went through it. Right after that, we saw the BRICS come online to grow the global GDP and global economy. And again, there was an expansion of credit, Brazil, South Africa, Russia, India, China. China, I think, is fairly indebted. India, I think, still has a long way to go. There's more corporate credit there, less consumer credit. So in this cycle, we're going to see more debt coming in India. But anyways, incidentally, at that same time, I saw Goldman Sachs identify the next 11. And when I saw the next 11 list in that pattern, that's what made me realize that, okay, there's the 11 obviously are Mexico, Egypt, Pakistan, Turkey, Iran, Indonesia, Vietnam, Thailand. I always forget a couple here and there. The key was that Pakistan was in there, along with Nigeria, of course. So at that moment, there was kind of something went off in my brain. I said, okay, if this pattern is going to repeat, and if obviously it's very speculative, what I was doing at the time, then these are the economy where credit is going to have to grow in the future. And I'll get to how this links into tech and venture capital, because it's a core fundamental part of my thesis in terms of what platforms we're investing in. So essentially, when the next contraction was going to kick in, and so I started planning for that, because I knew that all credit cycles have an end, which incidentally kicked in March of 2020. But planning for that was moving back to Pakistan, identifying the right timing, and then focusing on why Pakistan is going to grow, right? So let's come to that. We'll skip to that component now. So the last time the world went through what we're going through right now, and as I mentioned, there were 3 consecutive cycles, but there's also a long-term credit cycle playing out here, right? So it was between the periods of 1914 and 1945, where essentially you had a rising empire, which was the United States, challenging an incumbent empire, which was the United Kingdom. And the US used the technology disruption in so many ways. They became really good at the Industrial Revolution of its time, and essentially disrupted the UK as the reserve currency and became the reserve currency. And if you look at the cycle that played out subsequently, the landed class, which was your princely states, your feudals, essentially were undone by the new industrial barons in the subsequent industrial revolution. Fast forwarding to today, what we're seeing obviously is a rising empire, which is China, attaining symmetry, at least technological symmetry with the United States, and growing as an economy as well. And so you're seeing that same disruption take place. And at the same time, you're seeing the technology revolution, which I think post-COVID has essentially become pretty evident to most of the planet, disrupting the industrial barons. And by the way, incidentally, I had the same discussion with most of the investors in my fund because they're from the industrial revolution. A lot of the big business families in Pakistan, they were beneficiaries of the last cycle. So it was to explain to them that, look, we need exposure because this tech disruption is going to be unlike anything we've seen in the last 20, 30 years. Uh, so specifically jumping to Pakistan in terms of why the case for Pakistan. Well, there's nothing special about Pakistan. We're still the same people. We collectively were a disaster. Individually, we're geniuses, but we just can't seem to work together. Governance-wise, there's always flaws, this civil-military divide, but there's something else happening. The simultaneously, our money itself is changing, which is currency is digitizing, which on its own creates traceability. So Pakistan, an economy which basically has less than $300 billion, I think our numbers, ballpark numbers, 314 billion is our GDP documented. We have at least another 300 billion to 400 billion of an informal economy. In this cycle, there's regulatory components that are pushing for our documentation, which is OECD Common Reporting Standards, and FATF, which is pushing for cashless systems, combined with technology, which ultimately is by the very definition traceable and documentation. So that is what's going to change Pakistan suddenly in terms of why this cycle makes sense and why then the next 11 ties into Pakistan and how credit is going to grow, obviously, right? Credit can't grow until you have documentation. That's a key component of it. So now backtracking a bit into Pakistan in terms of technology. So this country, being the fifth most populous country, again, bad governance, multiple factors caused lots of people not to invest here, created an anomaly in terms of tech opportunity. We basically had 3G and 4G launch in India and the region. Our closest comparables are India, Indonesia, and China. I think it's unfair to compare Pakistan to Vietnam and Thailand. We're a much bigger country. So I'm going to use actual comparables to Pakistan. 3G and 4G launched in 2006 and roughly 2011 and 12 in India, Indonesia, and the rest of the region, even MENA around us. And that's why you saw massive growth of tech investments, because there was a significant amount of tech users that adoption that took place for smartphones and specifically for internet adoption. In Pakistan, it was due to a regulatory play. It was actually more political than most of us realize. The media industry, in a way, had a quid pro quo with the government at the time in 2009, where they didn't do the auction for the 3G and 4G license. So while we had dongles and other, various mechanisms, we didn't have mass scale adoption take place in Pakistan. So that incidentally took place when the government came into power in 2013. They did the 3G and 4G auction. And so to give you perspective, when I was looking at Pakistan as an angel investor, I just didn't think it was worth investing in Pakistan in 2014 and 15 because the total number of internet users were roughly ballpark around 18 to 20 million. So your total addressable market was extremely small, right? So anyone investing at that time was literally going to be funding the entire path for growth of the ecosystem and not really being able to see any exits or any meaningful returns on the invested capital. Well, let's fast forward to once 3G and 4G launched. In 2020, we are sitting at roughly around 80 million on internet users. I've heard numbers as high as 87 million, which are coming from PTA as of August of 2020. I do believe that because our seeding rate for smartphones and data connections is around 750,000 new connections a month. And so that's a pretty significant growth. I think we're ranked as the fourth fastest growing broadband adoption in the world. So pretty significant and important times. So we've attained a critical mass, obviously, with 80 million users. And that's why you're seeing all these platforms start to scale, where this key numbers start to kick in roughly around 2018 and 19, where I can speak to my portfolio company, the first one, bookme.pk, where literally this, when we were investing there, ballpark numbers were around $30,000 to $40,000 of monthly sales, gross sales. They scaled literally like 14x in the last one and a half years to about $500,000 a month. The reason is simple. It's just, the number of users, if you provide them a use case, they're actually going to use it. There's just not enough local use cases because of lack of funding. And that is what's about to happen to Pakistan, specifically with Web 3.0 and Bitcoin coming into play. And it's a bigger argument, so I won't go into Bitcoin to that depth, but I do have to mention that in the case of Pakistan, because now it's not really us, it's more the developed central banks and the policy that they've taken on in the last, I would say, decade specifically. So again, I'm referring to the US Fed, the European Central Bank, the Bank of England, and the Bank of Japan. And in the periphery, obviously, the Chinese Central Bank, they play a role always, but I'm referring to the 4 banks that control the SWIFT system, in essence, in global trade. The policy that the Fed, I'll jump to specifically in the US, embarked on in 2008 was basically a point of no return. That was speculative for most of us, I would say 4 years ago or 5 years ago. I think it's a certainty as of the position we sit in now, where we're just going to keep on printing money in order to sustain the system, which basically eventually means a debasement of the currency. Now, to give you an example of where the system sits today, roughly 79% of global transactions, including trade as well as contracts that are written in US dollars, are made up of US dollars. Roughly, the US produces roughly around 24% equivalent cash. So every time they print money, it's going to go overseas and in terms of in consumption for the shortage of US dollars. But the problem that arises out of that is going to cause massive devaluation for other currencies as the US dollar keeps on printing. And so that's going to eventually force a lot of countries to look for alternate means of settlements. And that's where fintech and a lot of what Ant Financial, which is about to IPO, is doing. It's setting up a parallel system to the SWIFT with countries initially by aggregating payments throughout the region. And eventually you can do settlements of all sorts. Nobody's going to obviously topple the board overnight. I mean, everything I'm talking about is a process. So there's hedges and geopolitics happening where alternate systems are getting created that are challenging the SWIFT system gradually, which in so many ways has been weaponized since 2012, where specific countries and individuals have been hit with sanctions if they didn't geopolitically fall in the right line with one country or another that has influence. So that's where we sit today. Ali, I'll let you ask a question in the middle, because I know I'm bringing in the 7-8 different parameters of what my thesis is based on. So I'd like you to bring me back on track if you have any questions specifically.
So this is very interesting, and I really want to hear you more about crypto, and especially with reference to Pakistan. So please continue. I think this was a juicy bit.
So so I'll jump straight into crypto then. So I think if you look at any portfolio around the planet, I mean, most smart money since 2008 has been positioning in gold specifically, because as you go into more and more money printing, essentially at some point you're going to see these inflationary hedges like gold come into play, which we're seeing already to some effect in 2020. But I think this is just a start. Gold is projected by Bank of America to be somewhere around $3,000 an ounce over the next 18 to 24 months. We'll see how that plays out. Bitcoin for me particularly, and the reason why I got into Bitcoin, the story goes, I have a friend, German friend from my MBA program, who did a documentary called The Death of Money, and that was basically on Bitcoin. I believe it's on Netflix as well. So that documentary he was shooting at the time, this was roughly around 2014, and he decided to shoot this in my place in New York. He was visiting New York, he was interviewing people, so he asked for my office space. There I got a chance to meet some people that are now known in the crypto space. I had no idea who these guys were. One was Roger Ver, Bitcoin Cash. The other was Charlie Lee. So subsequently, when we went out to dinner and I had a discussion, I thought it was stupid. Internet money has no relevance. I was more fixated on hedging with gold versus just looking at internet money. What I realized was it was actually more of a movement. It was not really just a bunch of techies sitting around and mining these coins to play in video games. It was actually a libertarian thought to it. I'm not a libertarian, by the way. I'm more of a global macro person, but it kind of ties into what's happening, right? So, and then you realize that what exactly is happening. And from that day, that's where the tech center came in, where you realize that it's actually nothing more than a protocol. And so Bitcoin is designed to be digital gold. It's a deflationary currency that basically every 4 years the mining rewards have, mining very similar to gold, And if we go back to the way the internet was set up, and you somewhat have to jump back in history always to kind of understand where we are in the current point in time. So when we look at the TCP/IP layer, it was just a simple, we were bound by capacity in terms of connectivity, which at that time was dial-up, and you had the basic communication data layer, TCP/IP. What that meant was that the disruption that could happen was things like essentially email disrupting postal services. As we moved to DSL and better connectivity, we started seeing things like basically travel agencies being disrupted. Then subsequently, you had your voice over IP disruption simultaneously happening. In that, there were roughly around 4 to 6 different protocols attempting to compete. And then eventually, one of the major ones essentially became the core component. And you had, your things you wanted to be investing as a venture capitalist at that time was things like Skype and Viber. Then you had your video over IP disruption, protocol disruption. In that, you had essentially multiple players competing. So I don't know how many of you recall back then. Most of the audience are tech, so they obviously understand most of what I'm saying. You had things like obviously the Flash player, QuickTime player, different multiple like 10, 15 players, DivX competing. And because it wasn't pervasive, so every time you went to a different website, you essentially had to download a player. That obviously DivX became the standard of choice, and now it's embedded in most players. So you don't really need to download separate players. QuickTime, which was Apple, no longer exists. And at that time, venture capitalists, when I went back into the spacing patterns, we're investing in things like Netflix and YouTube. In the current disruption we're in, which is the exchange of value protocol disruption, where the internet itself is merging with money, we're experiencing the same thing in the form of Bitcoin. And Bitcoin and cryptocurrencies are nothing more than the same protocols like that are competing for space. And 99% of these, I would say, are going to go to zero. Just like nobody talks about QuickTime or Flash players today. That's exactly what's going to happen. But Bitcoin on its own is coming into the system as digital gold. And if you look at the regulatory plays that are happening around us, with Basel III, with FATF, and with OECD Common Reporting Standards, all of these things are basically indicating that we're actually moving towards a cashless society, right? And that cashless society, obviously, is I'm going to tie into Pakistan, because what that means for Pakistan is 100% traceability. So it solves most of our problems as a country in terms of how we fail. But let's stay focused at the policy level in the world, right? So from a FATF and from a larger perspective, Bitcoin is doing nothing but essentially playing the role of digital gold and a collateral in the digital system. So imagine a world 20, 30, 40 years out from whatever speculative view, when there's no such thing as cash and you can only pay digitally, and 5G is pervasive, or whatever the iteration at that time. Connectivity is a utility. So people are just paying. You basically need to construct the whole financial system that exists on the planet digitally. So that starts off with gold, obviously, as Bitcoin is digital gold. And speculatively, everything that I'm saying, obviously, where the settlements, you need a collateral that's not controlled by any central entity. And then on top of that, you have platforms like Ethereum that are playing the role of tokenization that essentially creates fractional value. So you can basically have real estate tokenized and then sold in bits and pieces versus the entire real estate piece being sold. Stock market and all these things can be tokenized as well. And then eventually you have stable coins. And this is where the game gets interesting, because we're about to enter this world in the next 12 to 18 months as central banks have to change their policy. Now, central banks, what they're heading towards is that in the current system is almost over, right? In terms of when we keep printing, it's just going to create all sorts of problems. When you print money in one country, it's going to create inflation in another. And then that just creates new economic zones where people move on to other settlement means. So accelerating that, you're going to see central bank digital currencies. But at the same time, these reserve central banks are also solving their own problem, which is currently they have to print money and it has to go through the banking system. Now, the banking system is being managed by regulation, specifically Basel III, which actually creates a bigger mess by creating liquidity reserve requirements. So banks are more stringent in times of crisis and they don't lend. And so now central banks are trying to stimulate, but the velocity of money is just not increasing. I think, you'll be able to relate to this the most. If you look at the velocity of money charts, you'll see that the amount of money that they've thrown in, as much as the recovery that we've had in the stock market, the velocity just has not picked up, right? which is not a good sign in terms of what the actual health of the global economy is. So what central bank digital currencies allow the reserve central banks to do is they allow them to hit corporations directly or individuals directly. They're already hitting the corporates directly, but they're going to be able to pump money into individuals' pockets directly. And it changes how monetary policy, which is out of firepower, is run. So we're going to be looking at more almost real-time fiscal policy that could potentially change everything, right? So let's imagine for a second that you can now control this programmable money. So you can control if it goes to one economic demographic, how they're going to spend it versus another economic demographic. And then negative rates, interest rates pay into that as well, where you can force people time bound to spend money so that a situation like Japan doesn't happen, where people receive money and they start to save it. So fast forwarding to Pakistan and coming straight into why this is going to be important for us. From our point of view, I mean, if you literally look at India and compare Pakistan, it's the closest comparable. So what did Modi do in 2016? He demonetized the rupee. And if you read his subsequent speeches, he actually talks about the fact that he did this, and it's a nationalistic play. It was to digitize India. And most people at that time, I mean, I think in the tech sector, they were aware of Ambani's Geo, but Ambani was dumping free data ahead of time. And when the demonetization of the rupee took place and essentially all the loophole for the black money was taken away, it came through mandirs and all to essentially get converted to the new currency. You brought less money in circulation, and then people downloaded wallets. So India today is 75% banked. I think they were in a similar shape as Pakistan, or probably at least 40% banked back in 2016. Prior to that, in Pakistan's case, we're roughly 20% banked. As we start to move into new forms of money and we start to force adoption, at least to urban Pakistan, and I'm not saying that rural Pakistan is going to catch up overnight. So we do have to give that dichotomy in Pakistan and emerging markets, where it'll take probably the next decade and a half to become completely cashless. But at least urban Pakistan will become cashless. What this does, it changes the whole structure for the government of Pakistan. And I can tell you from an incentive point of view, as you make digital cash cheaper than traditional cash, their adoption will take place in an inflationary environment, because everyone, especially your lower income demographic, is going to look for those discounts. We're seeing this at Bookme's level, where it's a cashless platform integrated with EasyPasa, JazzCash, HPL, all the banks and OneLink. All the big payment gateways and platforms are competing with each other and dumping 20% discounts. And so people are no longer buying at terminals, they're buying on the platform. If you buy at the terminal with cash, it's 1,000 rupees. You buy on the platform, it's around 800 rupees. And that's inducing adoption of a platform. So this entire thing is going to play out over this next decade, and especially the next 5 years. And that is where the bullish case for Pakistan kicks in, where Kareem is nothing more than a ledger, right? It's a person hailing a ride, and another person and a driver meeting the demand for that ride. But the transaction, even if it's settled in cash, has been logged in terms of quantity and the distance traveled. And then eventually it's a wallet play. So what that does is it gives the government of Pakistan eventually real-time taxation ability. And we have to think outside the box here, right? So when I say this, a lot of times people immediately say, well, the government of Pakistan is not capable. They'll become capable. It's part of the game. I mean, that's this is where the international monetary system kicks in, where you'll see it in the form of the World Bank and IMF funding programs and DFID and USAID active in Pakistan, trying to push for one type of digitization system versus another. I'm already seeing a lot of those programs. So you'll see the government of Pakistan essentially move in that direction. But what you're looking at is real-time tax collection down the line. You're looking at real-time documentation of the Black economy, not with FBR knocking on people's door, but literally different swaths of the economy as economic activities captured in these platforms. So to give you an example, if Kareem, I think their exit was roughly around $3.1 billion in terms of to Uber. At least 600 to 800 million of that value came from Pakistan. I think another 800 million to a billion came from Egypt. And the CEO of Uber actually mentions this in the S1 filing, that Pakistan is the most exciting market for Uber, among the most exciting markets. I think I will cite you overzealous there. But to I guess bring the point home is my point is here that if just one segment, which is just basically ride hailing, can capture $600 to $800 million economic activity, while we're going to various countries around the world asking for $1 billion here and there to be parked in our central bank, just so we can meet our obligations of interest payments. I don't think that's something that really concerns me if you think outside the box. And really, I mean, the US, which is where most of my assets sit today, but I mean, I'm more worried about those assets in the US, where the debt to GDP ratio is sitting at 115% of a fully documented economy, and a country like Pakistan, where you have 78% debt to GDP ratio, or probably closer to a $600 billion economy, but it's sitting at 300 billion, right? So every time 2 to 3% of the Black economy comes online, that is going to add momentum to our traditional economy. And this is going to happen entirely by tech. You can already see the money flowing into tech in Pakistan, not just, I mean, the surrounding region and Pakistan. And what you're going to see eventually is basically that once MENA, India, Indonesia, and the surrounding markets get saturated, then the spillover money is going to start to spill over in Pakistan. This is not too far away from speculatively, when I see it, it's about 12 to 48 months, 12 to 24 months away, where you're going to see big numbers. Already this year, if you see the average seed round, it's roughly $1 million. Last year, the average seed round was $200,000, right? So that's a huge jump in quantum money. And as more and more money is printed in developed central banks, which we're going to keep seeing, you're going to see basically quantums of that money start to be allocating in terms of risk, right? So there's a crazy search for yield worldwide. And let's say, 10% of $1 billion is allocated towards Pakistan or emerging markets, and there's 100 funds like this. So you're going to see that quantum come in. And for Pakistan, 100, 200 million is significant enough that it actually moves the market because it's small. So we have a higher beta, and you see a huge upside. So with that, Ali, I'll bring it to a more structured approach because I'm kind of presenting from all different sides. I'll let people jump into questions specifically so that I can help them understand more.
No, thank you. That this was fascinating, and I echo the comments of Malik Jalal, who said that love the talk and your mic. So in the last 30 minutes, we have covered a lot from your personal journey to the history of economic cycles and debt in the world, to why Pakistan is seeing an inflection point in the adoption of tech and on cryptocurrency, and lastly, how you argued really well why tech solves a lot of the problems which Pakistan's economy faces. And as you said that, I think you gave a very good example of India by showing that the government will have to get it because it solves some really significant issues which Pakistan faces. We now have 37 people on the call, so it makes up for a very healthy, active discussion. People have already started putting questions on chat. Before I get into those questions, I'll use the liberty of being the moderator to ask you the first few questions. So Faisal, I would love to hear more about your fund and what's the size of your fund, how many investments have you done, and can you tell us a bit about your portfolio companies?
Sure. So our fund is $10 million. We were actually oversubscribed. I had kept it. The fund was launched in 2018, and as I mentioned, I always look at basically the waves before. I'm very data driven, so I study the market before jumping in. So the way I saw it was that Pakistan's not ready for that. It's not Silicon Valley where you have incremental capital coming in. So you can't adopt the spray and pray approach, which one of the funds in I'm an LP and 500 startups, they're known for that. And that makes sense there, where you had 30 years of innovation in Silicon Valley, and you've got ex-employees of PayPal and every other major company that exists, essentially going out and creating companies that have experience in scaling. In Pakistan, we literally had our first wave in 2010, which went all the way and peaked. That wave peaked, incidentally, very close to the way Bitcoin peaked in 2015 and 16. And then you basically had a bit of a deflation in the VC ecosystem. But from those successes and failures, you had employees and founders come out and create new companies. So we're in that first iteration of that. So the quality of companies we felt were not going to be there in terms of founders that could scale. So our fund's thesis is that to invest in 6 to 8 companies and back founders that basically have demonstrated to some effect scalability. And we look for the criteria for us is we're in the pre-series A segment, so we don't really look at anyone at seed stage, at the just idea stage. The criteria is typically some level of product market fit, month-on-month user growth, and if the model requires revenue, then some level of revenue growth as well. And so we've been pretty judicious in terms of the companies we go after. We're very selective. So to give you an example of our portfolio, bookme.pk, which is Pakistan's travel platform, but in essence, it's targeting more commuter buses. So these are your Daewoo's and the Skyways and Bilal Travels, so people moving not intra-city, like Swivel or Airlift. This is intercity. So this is basically your population in Punjab, that's about 110 million people, and KP, that's another 45 million. Distances are really small. So rural-urban divide makes them move on buses back and forth. And so that's, and also along with CPEC, then what you see is basically more and more bus companies come online because most of your population, affordability-wise, is not going to travel by air anyways, right? So it's always very like, there's a lot of analytics that go into it. And what I felt was, if you can mitigate, it's a very, very risky asset class. You add Pakistan onto that, it's extremely, it adds another layer of risk. So from our point of view, we do these analytics. We try to make sure that the founder is able to execute and has shown some signs of it. So the analogy I always do is, you're trying to make a pick. I'm the selector of the cricket team, right? So if I go invest in a 3-year-old or a 2-year-old, chances are I'm not going to be able to make a call if this person is going to get selected. So I'm trying to go after the 12-year-old and 13-year-old company or founder that you can see some level of skill sets. So mitigating the risk by that analogy. This I, by the way, created for some of the local families when I was raising from them. They were asking, where do you sit in the seed, between pre-series A and seed, how do you mitigate that risk? I'll talk a little bit more about our portfolio companies. Knowledge Platform, which is in EdTech. Again, it has become extremely important. This company is the leading EdTech. I think you've already introduced Knowledge Platform in
Pack launch, yes.
Pack launch. Yeah, so I won't talk too much about it, but we invested with Beacon House. They're roughly around almost 200,000 active users. The Akhan Education Board now is adopting their technology as well. And Mehboob is a seasoned founder. What I loved about him was that he's got his EdTech is in China, in a JV doing English, and Baidu's taken a stake in that company. He's exited companies at Thomson Reuters. So he's got the skill set to scale. And EdTech, in my opinion, is extremely tough. So you need somebody like that to scale this type of a company. We did Mandi Express, which is a B2B and a B2C in the fresh produce segment, very data driven. The company's been around for 4 or 5 years. They're in the farmers market. So they literally have documented the entire value chain there. And there's a lot of value that gets extracted. For example, if tomatoes are 20 rupees a kilo that are being sold from the farmer to the Mandi auction, at the retail level, they're being sold for 400 rupees. So a lot of value gets extracted in the middle. Mandi basically keeps documenting everyone in the value chain and then basically generates demand from Food Panda, Daraz, Kareem now, and the consumers directly. And then with that purchasing power goes in and moves up the value chain, eventually going straight to the farms. The last two are Bag Gallery and Rumi. Bag Gallery is the leading beauty and personal care platform in Pakistan, very similar to Namshi in the UAE, that ended up getting acquired by Noon.com. Again, the founder there was strong. It's a husband and wife founder and co-founder team. But the main founder, he was the head for Freezing Campina, Engro's parent company, the distribution head for Middle East, oversaw $500 million worth of distribution. So has applied a lot of that knowledge in. They're connected directly with L'Oreal, Procter & Gamble, Unilever, and source directly and provide products, scaling super rapidly. Last one is Rumi.pk. Asad Samar, who's actually a part of this group, one of the smartest guys I've met, ex-Goldman guy, PhD from Carnegie Mellon, came back, put $1 million worth of his own skin in the game, built this concept of taking 2- and 3-star properties in Pakistan, and that are family run, taking them over, standardizing them similar to the Pod Hotel from millennials and Gen Zers, and then digitally pushing this for rapid scaling in terms of talking about from bringing on customers' point of view. This is more of a portfolio stabilizer because it's not going to be like super scaling. It's more of a brick and mortar hybrid play. It's not oil rooms and WeWorks. It doesn't have the stupid stock crazy SoftBank money behind it, which causes those companies to implode. So yeah, just in a nutshell, wanted to walk you through our portfolio.
Thank you for that. And Rumi certainly they have beautiful hotels. Last couple of weeks ago I was in Islamabad and I got a chance to see their rooms, and they were, and look, both the location and the rooms are really nice. So congratulations on making that investment. Moving to the first question, it's from Emma, and he's talking about cryptocurrency. You mentioned your interaction with Roger Ver, and of course, for me at least, and perhaps for some others on this call, he's a character from Bitcoin Billionaires, and the Winklevoss twins, the main character in that book, were of course also alumnus from your college, Said Business School. So I don't know whether they overlapped with you. Perhaps there were a couple of years. They did. Okay. So that's great. Yeah. So he's asking that, it's a long question, but I suppose the bottom line of his question is that regulatory, cryptocurrency is still banned in Pakistan. Have you had any interaction with the regulator? Why have they banned it? Do you see that do you think that they can open it? Are they engaged with talking with people? Can you give us some insights about the regulatory view on cryptocurrency?
So the state bank, I think in 2018, and it was synonymous with India. I think both India and Pakistan at the same time banned trading and purchasing of cryptocurrencies. But obviously the cycle where we are on the planet doesn't stop it. So there's lots of people that are mining it and selling it on local Bitcoins. It's very difficult for them to actually control it, right? But from a regulatory point of view, I don't know if you saw just 2 days ago, the SECP has come out with a working paper on cryptocurrency in terms of having some sort of regulation around it, because they understand that this is the same disruption as basically, I had said this at a government forum, because I've tried to create awareness of what cryptocurrencies are and how much of it, it's not something that we can ignore. It can actually disrupt the government itself if people lose confidence in your currency, right? And most of us in emerging, especially frontier markets like Pakistan, innately have fear of our currencies because they devalue much more rapidly than other parts of the world. So, you really have to do the analogy, and I think they're fairly aware. The people at the state bank are extremely intelligent. Raza Bakr has brought a whole new way of thinking, and even the people that have been there for a while are now starting to get all this entire play that's happening. What you're looking at is, my analogy was, you don't want to be like PTA to WhatsApp, where you basically can't really do anything, or Skype. You don't want to be your Pembra to Netflix, where you're regulating the local channels, but basically Netflix and anything OTT can come into the country and you can't really do much about it. And so the state bank doesn't want to end up in that scenario, right? And the biggest awareness that I think the fallacy that people have about Bitcoin and cryptocurrencies is that it's basically all untraceable. That is 100% incorrect. Apart from a few private coins that don't exist on most exchanges, because most exchanges are regulated, at least the ones where you're not going to lose your money, like Coinbase and Kraken and Binance. You basically have KYC, AML, CFT rules already in place, so you can't just arbitrarily come in and play around. And Bitcoin itself is very, very traceable. I mean, if in cash, you can't trace transaction to transaction. Bitcoin, you can. So once you come into the system through tools like Chainalysis, you are going to be able to trace every transaction down to the originating IP address. So it's just creating awareness, and I think Pakistan's going to take some time. I don't think, I'm really bothered by people being allowed to trade in Pakistan or not. I mean, again, for me, cryptocurrencies is something, and especially Bitcoin itself, it's something that converges with the global macro situation and geopolitics around us, right? So as India is allied with the US, and what is the reason for that? The main reason is in 2025 to 2030, the Chinese economy is the largest in the world. Therefore, they can gradually start to assert themselves and say, we're going to accept, for example, the euros instead of the dollar for settlements. So what the US is doing, which is the second largest economy at that point, and India, because of Modi's demonetization, will likely be the third largest economy in the world at that time. And these are obviously IMF and World Bank projections as well. So there's an alliance there, right? That if you stay priced in dollars, this is what the US is saying to India, we will give you our global geopolitical influence today. And collectively, the US and India make up essentially the largest economy in the world. And so when you look at that and what's playing out, and Ant Financial and the role China is playing in terms of creating a counter to the SWIFT, that's where cryptocurrency is more interesting for me, because Ant Financial obviously has a stake in Easy Paisa in Pakistan. And I can see that they're pushing, if the Chinese want to push for digital payments, our government is being pushed for this through FATF and through OECD common reporting standards. So it's all essentially converging, right, on Pakistan. So I mean, again, it doesn't really bother me whether they ever legalize it or not. I think at some point it's just going to circumvent them if they don't legalize it. But again, the government can always enforce its currency. Remember, they can always have a digital rupee token and force you to pay taxes in that. And so I don't think you can just discount the government entirely in this game. And it's not relevant to have cryptocurrency in Pakistan in terms of day-to-day trading.
Thank you for that. And
answer the question?
Yes, I think it partially does. And but with that, I'll move to the segue into the next question. You seem to be a fan of, and you are a fan of demonetization, and we have spoken about that earlier. So Hamad had a question that he's saying, isn't there a risk of there could be a risk from taking cash out of the economy because people are dependent on it, and plus shadow economy, which, as you said, perhaps could be as big as the formal economy. If you take the cash out of this, then it might hurt the shadow economy. So that's the question. That's the first question from Hamad, and then I'll move to the second question. And just Hamad, my 2 cents on it. Like in the UK, the government wanted to phase out checks. And they gave a deadline for it, which was supposed to be, I think, 2015. And then they had to push it back, and it still hasn't been done. So as some of you might know, I was a fintech analyst and I was CFO of one of the largest payment companies in Europe, and which is now listed in Canada. So there's no payment type in the world which has ever been disrupted. Payments have always been additive. We still use coins which were made in few year BC, and we use banknotes which were made in, I think, the year 8 or year 10 AD in the Chinese Qing dynasty. So none of the payment types have been disrupted. So that's just my 2 comments on, can we take out cash completely? But Faisal, what's your comment on the risks from demonetization? Because even in India, there was a big school of thought which believed that demonetization was a failure.
Mm-hmm. So I agree with you. I don't think you can eradicate cash entirely. Look, it's about adoption, right? So that's nothing is symmetric in my opinion. It's happening in layers, right? So for example, part of our economy in Pakistan is digital. People are moving more and more onto digital platforms, using Kareem, Baikia, all the platforms out there, right? And a huge part is not. But gradually they're moving into it as the awareness gets created. The demonetization is not something that the government of Pakistan is going to do abruptly. I think it's going to be done gradually. And again, this is speculative, but what I feel is they'll start to offer a new type of a currency, right? So they'll offer up the plastic currency that they've kind of indicated to, which is like the European bills. And that is something that they'll bring in. They've learned the lesson from India. India did it abruptly. I don't think we're going to do it in that same crazy manner, because there was a huge political fallout from that, right? And I don't think we're anywhere near ready in terms of the number of people with smartphones. I mean, roughly 80 million, roughly 70 million people have smartphones. So the ability to pay digitally is not even there, right? So you're going to see a gradual process in terms of how this demonetization takes place. It's already happening in the forms of what FATF is forcing you to do, right? Source of funds. So property, while they've opened it up this year till I think December 31st, 2020, where there's no source of funds asked in buying a property. But under FATF, they have to take that away. So gradually the plugs for black money in terms of where it can be parked are being taken away. And then eventually people will end up adopting one form or the other, especially our median age in Pakistan is 22.8. So, I mean, let's also think about the fact that 90% of your population, especially in the lower income demographic, they have nothing to hide. They're not hiding because they want to hide. They're hiding because banks don't want to cater to them. So if you make less than 25,000 rupees, you walk into a bank branch, you get intimidated because the tellers and the local bank officer does not want to deal with you. So that's where fintech comes into play. I mean, these digital wallets, The number one use case for Easy Paisa and Jazz Cash is domestic remittances, essentially, which is their OTC service, right? So they're filling that gap for that banks should have been essentially playing out. So I see the whole demonetization playing out gradually, but it's going to be more rapid than I would say the last decade. So what you're going to see is a lot of regulatory pressure come in. And again, remember, the main reason for this is that the developed central banks and the big bulge bracket banks, they need the global GDP to grow, right? So that can't happen until the black economy in the next 11 is essentially documented gradually. And so 3% a year of 300 billion potentially of an informal economy is significant enough to add 3% to our regular GDP growth, right? Which is not based on output. So just trying to change the paradigm a little bit in terms of how growth is going to come. And I believe India and China have grown the same way. China's numbers, which are always questioned in the US, I don't think China ever had more than 4% or 5% of actual productivity based GDP growth. The balance was the black economy or informal economy coming online. And that's where they will keep adding that 2 to 3%.
Yes, that's a very good point, and I agree that I think that the growth rate can be accelerated because of that shift. And as you said, that it will be it will take time, but it's a gradual shift. I'm just conscious of time. We have 7 more minutes, so I might have to skip some questions. There's a question that what is the implication of U.S. elections on Pakistani tech ecosystem in particular, but Pakistan in general? And
it's more geopolitical. I mean, you're already seeing the Afghan peace talks collapse, right? So you saw the government of Pakistan highlighting that there's concern about India a little bit more. So it's more. I think it's more geopolitical. I don't think from a tech point of view it has much of a difference. I mean, I've always said that, look, when you look at tech, it's the American digital empire versus the Chinese digital empire, right? So you're looking at basically the Chinese entering directly or through their Southeast Asian investments. The Americans will enter via VC funds here and there, but they prefer to enter via their Middle Eastern investments or European investments. And so there is a geopolitical shift, as I mentioned, with India being aligned with the US, that naturally pushes Pakistan towards the Chinese bloc more and more, right? But I don't think that we're going to be a hybrid country. A fair chunk of this country is anglicized, especially with the user interface adoption. So when you look at WhatsApp and Facebook, it's fairly pervasive throughout Pakistan. So it'll take the Chinese. I used to say a decade. I'm going to take that back because I've seen what they've done with TikTok. So they go back and they learn. So we're still. My point is, we're going to be a hybrid economy that some parts will be leaning to the US and some parts to the Chinese. But from a military and government point of view, I think we're definitely linking into the Chinese system and economic zone. So to answer your question, I mean, I don't think much changes because I don't think US policy on China is going to change too much. It just won't be blatant trade war. It'll be more softer, but carrot and stick approach with China.
Thank you. And now two industry specific questions. The first is on e-commerce. Do you know what's the persona of an e-commerce user in Pakistan, and what can be done to increase the adoption of e-commerce services?
Sure. So the majority of your e-commerce users in Pakistan, and I should have put that data up here. They're coming from your urban cities primarily, right? Where the connectivity is, and it's your middle income bracket primarily, and your lower income bracket, like lower middle income bracket. These are again younger audience that tend to shop online, so they're going for these Facebook based shops and Instagram based shops. Instagram less so, more Facebook, and then obviously Daraz. It's just going to grow with time as adoption is taking place, as we saw post-COVID. I mean, I saw this across the board in every portfolio company of mine and other funds as well, where, in sectors, a greater number of people are coming online because there was necessity breeds adoption. And that I think is still taking place. So once this network effect kicks in, I mean, if I really do that lag effect because that 3G and 4G adoption, what happened in India, right? In India, you had nothing but in 2014 and 15, when I looked at all the ads on Dish TV, they switched to Big Basket, Flipkart, and it was a race against time in terms of educating the population for one brand or the other. Same thing's about to take place in Pakistan in the next year or two. I mean, I'm hearing already the Panda Mart, food delivery hero, is about to get extremely aggressive with Panda Mart in Pakistan. And they're already building dark stores in Karachi and then eventually Lahore and Islamabad. So the grocery sector, I think, is going to get extremely disrupted for urban Pakistan. and then gradually it's going to keep expanding. I'm also seeing ledgers come into play for your lower income segment, especially for your traders, like very small scale traders. So gradually it'll start to kick in.
And thank you for that. And the last question is on robo advisory. So what's the future of robo advisory in Pakistan?
I have no idea. I haven't been involved in robo advisory, so I wouldn't be able to answer that question. I mean, I would think, look, it comes down to Ali. I think you could answer this question better than I can, given that you've launched the Robinhood of Pakistan. And when we spoke about it a year ago, I mean, I was just surprised at the adoption rate, right? I mean, the only thing I can add on robo advisory, and this would just be me speculating. I mean, I've seen what I'm seeing is like obviously insurance, like people are calling in, doing calls and sales calls and trying to convince people on that ₹1, ₹2 insurance a day. So I could see that turning into some sort of robo advisory. But Ali, why don't you comment on this, since that's right up your alley?
Yeah, no, thank you. So right now, the biggest hurdle for any use of tech in the capital markets and in investment in particular is regulation. So, regulation still require digital vet signature. It requires vet signatures. So you cannot have digital onboarding. In fact, if I take a step back, so Pakistan had a period of between 2008 and 2018 when we went into a regulatory overdrive, and a lot of onerous regulations were put in place, and the regulator was very paranoid about investor protection. So not just robo advisory or any kind of advisory suffered because the regulator put just so onerous regulation and penalties that if you advise somebody and your advice didn't work out well, you were liable for that advice, and there were serious penalties which could have been imposed upon you. So this period really shrunk the market. So if you look at overall numbers in Pakistan, till last year, 200,000 people invested in stocks. A similar number, slightly lesser, invested in mutual funds. So that's 0.1% of the population. The comparable numbers in Bangladesh are 10 times higher. In most of the regional countries, it's 1% of the population who invest in stocks. In the US, where I suppose a lot of you are, 54% of the population invest in stocks. So in Pakistan, it's 0.1%. So the first step, the good news is that now the regulator, especially over the last 18 months, has started to deregulate. Roshan Digital is one of those steps. I work for the Asian Development Bank, and Asian ADB is giving government of Pakistan $350 million for financial market reforms. As a part of that reform, which I'm working on, are these things to deregulate the market to facilitate the growth of tech and adoption of fintech for providing financial services to a greater number of people. So I'm hopeful that these things will happen. The starting point, the basic necessary ingredient is online onboarding and moving away from vet signature. So it's a trivial thing, but it wasn't done in Pakistan, but hopefully it's coming now. So with that, we have run out of time. Faisal, this was fascinating. And, I would love to sit again with you and hear your stories about cryptocurrency, especially your interaction with Roger Ver, and how was it? The dinner which you mentioned when you met these guys. How were the stories of back then? So, but I suppose that's a topic for a long discussion. And already it's 11 o'clock in the night in Karachi and in Islamabad. So with that, Faisal, thank you so much for your time.
Thank you, guys.
And have a good night.
Thanks. Take care.
Take care. Khuda Hafiz.
Hafiz.